Gold is on the brink of making history. Imagine the price shattering $4,000 per ounce by mid-2026. Sounds extreme, right? Well,
but I think the bigger picture that investors need to be aware of is that there is a massive shift going on around the world, that it's really two-pronged. From the point of the central banks, it's a movement away from US dollars and into gold. So central banks that had heavily relied on the US dollar as a primary reserve asset, they are divesting of dollars.
If you think about it in real dollar terms, I mean, good grief, if you factored in the growth in the money supply, degradation of the money unit, since 1980, when silver was at 50, or since 2011, when silver was at 50, very briefly both times, by the way, silver would probably have to be $200 right now just to be equal to those highs. Okay.
JP Morgan has just raised its official forecast to exactly that. At the same time, America's money supply has exploded to a record $22 trillion. And with Trump pushing for massive interest rate cuts, we could be entering the perfect storm for gold. So in this video, I'll show you why analysts are suddenly so bullish, how central banks are quietly driving this rally, and the risks you need to know before getting caught up in the hype. Stick with me, because the charts you'll see today tell a story most investors are missing. Let's start with the bombshell from JP Morgan. In April 2025, the bank revised its outlook on gold. They now expect it to average $3,675 per ounce in Q4 2025 and climb to over $4,000 by Q2 2026. That's a huge jump from their earlier forecast of just $3,019. Why so bullish? Here are the three main drivers they highlight. Massive central bank and investor demand, running at around 710 tons of gold per quarter. Recession fears and US-China trade tensions, with tariffs and political friction adding fuel to the fire. Other banks joining the bullish camp. Goldman Sachs just raised its year-end target to $3,700, with a so-called extreme tail case of $4,500 an ounce. This isn't just hype. It's based on real rising demand paired with mounting global uncertainty. Now let's talk about money supply, the fuel behind the fire. As of June 2025, US M2 money supply hit $22.02 trillion. That's a 4.5% jump year over year, the fastest pace since 2022. For context, M2 includes everything from cash and checking deposits to savings accounts and money market funds. It's basically a measure of how much liquid money exists in the economy. Here's why this matters. A flood of money can weaken the dollar. It can spark inflation. And historically, it pushes investors toward hard assets like gold. So while JP Morgan's forecast sounds aggressive, the liquidity backdrop actually supports the case. These two stories, gold forecasts and exploding money supply, are deeply connected. JP Morgan emphasizes that it isn't just retail investors buying gold. Central banks are leading the charge. In fact, BRICS and emerging market banks are diversifying away from the dollar. Gold now makes up nearly 20% of their reserves. Analysts expect another 900 tons of central bank gold purchases in 2025 alone.
Look, regardless of what happens nominally, real U.S. stock prices are going way down. I mean, if you're going to measure U.S. stocks in gold, and U.S. stock prices have been falling for 25 years, measured in gold, right? But I think that the pace of that is going to accelerate. I think you're going to see a much bigger drop relative to gold. But we may even see a drop just nominally because the U.S. market is so overpriced. It could even decline nominally, especially like tech stocks, the NASDAQ. I mean, some of the stocks that are really up there could fall even in nominal terms, but they'll get killed in real terms. So that investors should be getting out. As I said earlier, it's pretty clear that the superior returns are going to be earned outside the United States for many, many years to come. The dollar is going to be marked down. The only question is how much. I mean, we actually have a weak dollar policy, even though, they don't want to come out and admit it. If you read between the lines, and it's not that hard to do, that's what everybody in the Trump administration is advocating for, is a weaker dollar, a lower dollar. Which, with the tariffs actually makes it worse, because not only do we have to pay the tariffs, we have to pay more dollars to buy the stuff that's tariffed because the dollar's lost value. So it's not that not only are foreigners not paying the tariffs, we're paying double because of the weakness in the currency.
Think about that. Global institutions are actively swapping dollars for gold. And when the biggest players in finance are making that shift, it creates a floor under the market that small investors can't match. Politics also plays a massive role. President Trump is publicly urging the Fed to slash rates by 3 full percentage points. That would be one of the most aggressive rate-cutting cycles in history. If that happens, borrowing costs drop, the dollar weakens, and gold almost certainly surges. Even if cuts don't go that deep, the market is already pricing an easier policy. That's why sentiment is shifting so quickly. As Barron's put it, quote, "Gold's advance to $4,000 per ounce is more of a when than an if." This isn't just theory. Gold is already proving itself in real time. So far in 2025, gold prices have surged 29%, breaking 28 all-time highs and recently crossing the $3,500 mark for the first time ever. And it's not just bullion. Gold miners are rallying too. The sector is up 45% year-to-date, with companies like Newmont and Royal Gold leading the way. Even among everyday investors, excitement is building. One Reddit user put it bluntly, "Nah, it'll be $4,000 by Christmas." Whether or not that's true, it shows how strong momentum has become. But we should be clear, nothing is guaranteed. JP Morgan points to a couple of risks that could derail the rally. If central bank demand slows, prices could stall. If the US economy proves resilient and the Fed holds rates higher for longer, gold might lose its shine in the short term. Still, analysts say the overall outlook is skewed to the upside. In other words, the risks are real, but the odds favor higher prices rather than lower ones. So here's the bottom line. Gold, headed from $3,675 in late 2025 to $4,000 plus by 2028 mid-2026, has a strong case behind it. Exploding money supply, central bank buying, geopolitical tensions, and potential Fed easing all line up as tailwinds. Now the big question, do you believe gold will hit $4,000 or even beyond? Drop your thoughts in the comments, smash the like button if you found value here, and subscribe for more data-driven breakdowns on gold, markets, and the economy. This is one story you don't want to miss, and I'll see you in the next update.